Hello and welcome to Crypto Weeklies. In this video, we analyze BNB, the Binance's crypto ticker. None of the content is financial advice. Right now, this per my website, the composite risk for DCF in BNB is at around 0.29. It's less than zero point 0.3. That means it's in an accumulation zone. Again, this is derived from several metrics such as regression based deviation, time weighted average price based deviation, 20-week simple moving average price based trend and valuation, then market cycle based metrics such as how far is it from its all time high, volatility, beta and Sharpe ratio. Together you can read the full report over here if you want to click over there. Right now the price of BNB is at around $607. It has come down quite a bit and it's in this well defined zone which BNB spent a lot of time between March 2024 to essentially breaking out in June 2025. So have the risks finally come down to a digestible risk level? That's the purpose of this video, to analyze if BNB has gone down to in an accumulation phase. So per the 200-week simple moving average based price analysis, this blue line which when turning white, that's when the price is below the 200-week simple moving average. That hasn't happened. Price if it were to go to 200-week simple moving average right now, it's at around $495. But this 200-week simple moving average is a rising function, as price has spent a lot of time above $500 essentially since it broke out of that range in February 2024. So almost 2 years ago. 2 years is almost 104 weeks. So the impact of this rising function of 200 week, if you were to extrapolate that into the future, let's say price meets the 200 week simple moving average sometime in later half of year 2026. If you were to extrapolate it till July, let's say that at that point the price, if it falls to $530, could go to the 200 week simple moving average, and that time the color of the if it falls below that, like it fell in 2023, again later half of the bear market, rather than falling in 2022, BNB was lower than the 200-week simple moving average in 2023. If this time around, if the bear market gets slightly more steeper than the 300-week simple moving average, which is this green line over here, which has a slightly higher what you can say is a slightly higher angle of ascent, as the 300-week simple moving average started from $150. Now the price is more than 4x of that 300 week, so it helps grow the 300 week over here. So there could be a chance where the 300 week is in later half of 2026 is exactly at where the 200 week is right now, so closer to $500 level. So those two things haven't happened. So again, per the longer term moving average price based perspective, the price has not bottomed yet. The shorter term moving averages, such as the 50 week, which is this blue line over here, is at around $800. 20 week is at around $900 for BNB, as the price topped in September October 2025 at around $1300. So almost over 50% the price has already corrected from that point. You can see not too long ago the price was at around $1300. Now it's had the 50-55% correction. For context, in the last bear market, let's say from the peak to the trough, let's say comparing with this peak, which was slightly higher than the later half peak, then in that by bear market the price only bottomed. So the bottom was only at around 73% for BNB, which was, again, even if you compare it with Bitcoin, it was slightly better in terms of holding its value. You do the same analysis over here for Bitcoin from the November 2020 one peak to the November 2022 drop. So Bitcoin had fell 77%, whereas BNB over here only dropped 73%. So if this time around, if the drops, let's say instead of 73%, the drop is only 63-65% with diminished volatility, one could argue that diminished volatility would not come into the picture for BNB, because this time around the peak for BNB was essentially over 2x of the previous peak, from $700 to essentially $1375. So the peak grew from 200% roughly, and that was even higher than what Bitcoin managed. So from here, from peak to peak, if we compare the the rise was around 95, sorry, 93 to 95, almost 95% if you compare the 2021 peak to the 2025 peak. It was at a 95%. And if you do the same analysis for Bitcoin over here, you would find something different. So from here, 69K to 126K, the peak returns were only 83, 84%. Long story short, Bitcoin, BNB compared to Bitcoin held better in the bear market, the drop of last bear market, that is, and also performed better in the bull market of 2025. So that's the analysis when compared with Bitcoin, the longer term analysis. So what could it mean for this time around again? The diminished volatility, if that does not come into the play, and if, let's say, as BNB grew a lot in 2025, if it drops exactly the same as it dropped in 2021 2022 time period, the low for BNB could be at around $380. So that's several ways away from here in terms of percentages. From here, it's roughly about 37% lower than the current price. So that's the worst case scenario for BNB per the technical levels. Coming to our own risk based models for BNB, let's start with the major ones. Let's start with the time weighted average price risk model. The time weighted average price risk helps identify, again, has done a really great job identifying if the price has been in an accumulation phase where the price is close enough to the blue line. This blue line is the time weighted average price line. This is not just taking an average based on let's say uh, let's say average price over key periods such as uh, 10 weeks, 20 weeks, 50 weeks. The entire time period is considered, and the time spent at those key levels is matters more than just what the price was. So if, let's say, price spends considerable time, about more than 50% time, about at around $500, like it did since 2024, the time weighted average price grows a lot along with it. And this is a very less reactive average than, let's say, 20 week simple moving average or 50 weeks, which reacts quite volatilely in with the price action. But as this is time weighted average price is taking an average of all of the um, all of the previous time spent at some of the key risk levels. You can see this identified the 2025 peak at when the risk levels went to a risk level of 9, even you could argue. And this is a live model, so what it says today, it can only again, it does not retroactively fix itself based on what happens tomorrow. So it only shows a static truth, not a dynamic version of the truth. So right now the time weighted average price is at around $300. One could expect that towards the end of the year, if everything stays the same, with even if despite the price dropping to some of the key risk levels or 200 week or 300 week moving average, the likelihood that the time weighted average price goes to this level of about $380 towards the end of 2026 is not too outlandish. If the upward swing or the time spent in this last 2 years in above the $500 helps the time weighted average price extrapolate to those levels. So in terms of the current risk level with respect to the time weighted average price, it's risk level 6. And for context, whenever the risk levels is less than, let's say in this zone where the risk level is less than 3, that's when DCA in makes the most amount of sense towards the end of the bear market. If you were to be slightly more optimistic, risk level 4 is also not the worst idea, because there is no guarantee that the price will go to those lower risk levels. You can see that in the last bear market, there were two distinct drop. The 2022 June drop, where the risk level was at risk level 4, where the deviation between the price and the time weighted average price was about 50%. That means the price was, roughly speaking, $200. The time weighted average price was $130. The better buy zone was at risk level 3, later half of 2023, around September 2023, where the difference between the price and the time weighted average price was only 27%. But again, there are no guarantees. If you would have waited for the risk level to drop to risk level 2 or risk level 1, you would have missed out the window to DCA at the best time. So based on how and if the price goes to the risk level number 4, again, that's when DCA makes some sort of a sense per my interpretation of the model. That's how this model identifies the accumulation phase in the bear market. This is one major model, and again, the weight for this model to affect the overall risk is relatively high. It's about 18, roughly one fifth, 18% or one sixth of the total weight. The highest weight is on the logarithmic regression based deviation and the drawdown from all time high. The drawdown from all time high we discussed over here using this analysis of uh, returns as well as from the previous all time high, how low is the current price. So not a surprise that there has been a significant drawdown, and that has essentially lowered the DCA related risk, as well as the opposite of that is the time weighted average price risk is quite amplified. So if you want to quantify the time weighted average price risk, it's also available on this um, area over here. The time weighted average price risk level is at around 6 in terms of the decimal or the whole number. But if you want to go into the details of let's say overall time weighted average price risk is at around 0.75 in terms of how it looks in terms of bear market related risk analysis, and how low the price could go per this interpretation. If there isn't a severe bear market, or a recessionary bear market, that is the bear case over here, this requires a significant macro recession. Ignoring that, the panic case for BNB is at around $305, and the non-panic um, case is at around 37% down from over here at $380. That's where again the price becomes more confluent with that 37% drop over here, as mentioned previously, and it would be about, the drawdown would be about the same of 2022 bear market. So again, these different models are pointing to a single confluence zone at around $380 in terms of a bottoming pattern. But again, there is no guarantee that the price has to go to that level. What makes the job of identifying accumulation phase easier is the overall accumulation risk. Right now it's at around zero point 0.3. If it goes to, as mentioned by this composite risk model, if it goes to 0.2, that means DCA has been more and more lucrative. Right now, the regression based risk, as the 25% weight that the model has, is this fair value interpretation of the regression, polynomial regression based model. This model tries to cut the price action into two halves in a non-linear fashion with 2 degrees of freedom, or a quadratic equation based fair value interpretation. This model says that the risk levels have died down completely. Its risk level is less than 0.1. That means it's the best time to DCA. um, Again, best time to DCA per this model for BNB, like it did identify in August 2024 and April 2025. But there is a huge caveat. Again, in the depths of the bear market, the price deviation between the fair value and the price is more than 50% at one point. So for example, in September 2023, the regression based fair value was at around roughly $430, whereas the price at that point was at around $205. So it does provide some insights, but the better way to look at it is in terms of either the raw values over here, how low can this go. If the overall risk settles at around 0.1, bottom settles at 0.1 bottom, without much panic, the bottom could be around $315. One better way to look at it in terms of the standard deviation residuals is the same. This is, instead of color coding at a daily level, these are the weekly candles, and the fair value essentially the same model to identify what's the fair value. But what we have done over here is identify bands, and applied deviation, standard deviation based bands, which identify the potential bear market bottoms, like they did back in August 2023 to October 2023. If the price action were to go to those macro lows using this ascending valuation model, the bottom for BNB could be around $420 itself. That's the one standard deviation undervaluation zone for BNB. So somewhere between 380 to 420 dollars is the optimistic case for BNB to bottom, and where it could top again. That's anybody's guess. The non euphoria peak that BNB managed to achieve in, or come really close to the in the rally of October 2025. That level currently is at around $1,500 to $1,600. Again, extrapolating that could be slightly tricky into the next bull run. So that's a topic for another day. But the range peak, the range max is at around $3,000 as estimated by this two standard deviation residual based model, or extrapolation model, till let's say sometime in 2028 2029 time period. Just a forward looking model, not don't uh, rely too much on it. The 20-week simple moving average price based model says the risk level has also died down. It's at around 0.03, so only 3% risk. It's not a surprise, as the 20-week simple moving average for BNB is all the way at around $900 roughly speaking, whereas the price is at around $600. In terms of the raw values as well as the proportional drop, it's a significant drop, and one could easily visualize that by looking at the angle of descent over here. It's a much steeper descent than even in the 2022 May to June, and that drop lasted only a few days, whereas this has lasted for at least 2 months now. So that means that per the 20-week simple moving average price based risk, that BNB bottom is very close. If we go by the overall estimation of what the machine learning model says, the in-house trend, weekly average price based trend, seasonal ARIMA based machine learning model helps identify what's the fair value, or what's the bear case, what's the bull case. So right now, as the asset class is in the bear case, the non-panic bottom for BNB is at around $480. But I would imagine that in the next, this is again forward looking model, in the next 6 months helps identify what the bear case is using machine learning models which are trained on the historical price action, and these are the confidence levels using one standard deviation or 68 percentile confidence level. If there is a panic case scenario, let's say there is a couple of months of panic, 6 months panic is way too much to anticipate or forecast. Even in the last bear market, the panic stage, one could argue, was essentially came in two halves, first between November 2021 and January 2022. So couple of months over there, November, December and January, 3 months over there, and then April 2022 till July or June, sorry, late June 2022, again a couple of months. So 5 months in total. This time around, we have already spent a month and a half over here and another month and a half over here in the bear case. So another 2 months of a panic could be on the cards, and if that were to be manifested, then the drop essentially is from mid February to mid timeline to be to be determined. Let's extrapolate 2 months out into the future from here, from mid of February to mid of April. That would be 2 months. If that kind of manifests, then the two standard deviation or panic case for BNB bottom is at around $370. This is a weekly average, so the bottom could be slightly below it at around or $386, which would be approximately, the bottom could be somewhere if you take a midpoint at around $370 for BNB, with the 2 months of panic ahead of us if that scenario manifests. So all in all, as mentioned previously, between that 430 to 380, that's the likely scenario for the BNB bottom, as also corroborated by the non-panic base bear case for BNB. If let's say there is a prolonged panic in the asset class, in that scenario the price could go as low as about $305. On a hopeful note, what could BNB do in a bull case scenario? A bull case of BNB, let's say the timeline is again to be determined. The bull case scenario for BNB, as extrapolated by the two standard deviation or slightly optimistic model, again 3 years of bull market, could easily, again the price could go to $1,600. The max ceiling right now, that becomes more of a logical target for BNB, is at around $2,300. From here it's about a 4x, from 600 to $23. This is the weekly average price. But let's say if we bottom at around $400, that's about a 6x from the bottom to the peak. And the estimation of bullish targets using, rather than relying on just one model, the confluence of several models says that $2,400 is still within the grasp in the next bull run, that would be a 4x from here. But if it bottoms at around $400, that would be a 6x. With that, I'd like to conclude. Hope you enjoyed the content. If you did, please give a like, a subscribe, and check out all of these charts on cryptoweeklies.com. Thank you and have a nice day. Bye bye.